Welcome back, everybody. Today, we're going to be diving deep into how some of these big moves we've seen from tech giants are rippling through the markets and, yeah, what it all means for you and your portfolio.
Absolutely. And to connect all these dots, we've got a recent financial podcast.
Oh, right. It's called Podcast. MimiVsJames Weekly Pick. Tech Giants and Macroeconomic Indicators. Multidimensional Market Impacts 2024 Mo113.
Right. And we've also got some really interesting in-depth analysis of Google here.
Yeah, so we're going to try to figure out how companies like NVIDIA and Google are, maneuvering through this wild market.
Exactly. And most importantly, what does all this mean for your investments?
One thing that really caught my eye, first of all, Supermicro just shifted $6 billion worth of orders over to Dell.
Wow.
And then on top of that, I saw Bitcoin is like surging because people are thinking Trump's coming back.
Oh, wow.
So yeah, this is going to be a wild ride.
Yeah, it is. So let's start with NVIDIA. I'm sure you've seen those crazy headlines about their 94% revenue growth this quarter. But the real story is what this tells us about the bigger picture.
Yeah, I feel like AI is the hot topic right now. But is it really having like that big of an impact?
Well, NVIDIA's success is a pretty strong signal that, yeah, AI adoption is accelerating like across a bunch of industries.
Interesting.
And they're obviously a major player in the AI chip world, but also gaming and just high-performance computing in general.
Right.
So their growth is kind of reflecting this broader trend that we're seeing.
So it's less about NVIDIA itself and more about them being a good indicator of like a larger shift toward AI.
Yeah, precisely. But there's always a but. Right.
What's the catch?
Well, in NVIDIA's case, it's the supply chain and some potential cooling challenges they're facing.
Cooling challenges? What do you mean?
Yeah, with their new Blackwell GPU architecture.
Okay, you're going to have to break that down for me.
Huh.
What is this Blackwell thing and why is it running so hot?
Well, you can think of it this way. The more powerful the computer chip, the more heat it's going to generate, right? And Blackwell, this is like NVIDIA's latest and greatest. It's built for these super complex AI tasks, but all that power needs some really, really advanced cooling solutions. And that's where the bottleneck is and also where the opportunity is.
So NVIDIA might be struggling to keep their chips from melting down, but that's actually creating opportunities for other companies.
Exactly. Companies that specialize in these advanced cooling solutions are probably going to see some huge gains as demand for these technologies just skyrockets.
Wow, so you're saying like Vertiv Holdings and some of those Taiwanese suppliers?
Yeah, exactly.
It's fascinating how one company's problem can become another company's gold mine. It really shows you how interconnected everything is in this market.
For sure.
So speaking of interconnectedness, what about this super microcomputer situation? $6 billion? That's a huge amount of money to just like shift over to Dell.
Yeah. On the surface, it looks like a massive win for Dell. And it is in the short term. But if you look closer, that $6 billion only represents about 6% of their annual revenue.
So it's not like a total game changer for them in the long run.
Right. It's more of a temporary boost.
Gotcha. But you're saying their potential for growth in 2025 is something to keep an eye on.
Yeah, definitely. Their 2024 numbers are looking kind of low, so that could set the stage for a pretty big comeback.
So for anyone out there thinking about investing in Dell, you're saying think long-term, don't just jump in because of this one-time order shift.
Yeah, exactly. It's about looking at the bigger picture, their overall growth trajectory.
Makes sense. Okay, let's move on to another tech giant that's been in the news a lot lately, Google. Now they're facing another antitrust lawsuit from the DOJ, and this time it's all about their Chrome browser.
Oh, right.
And they might even be forced to break it up. It feels like we've been here before.
It seems like Google is always under the antitrust microscope, right? Seriously. So what's the real issue here? Is their dominance truly, like, anti-competitive? Or are they just making products that people really love?
That's a really tough question. On the one hand, they've been accused of crushing the competition, but on the other, their products are consistently popular.
Yeah. No, I get it. I use Google products all the time, too.
Right. So it's a complex debate, and ultimately it's going to play out in the courts.
Right.
But regardless of the outcome, all these legal battles are definitely creating some uncertainty for investors, and that uncertainty affects their stock price, too.
So how should investors be thinking about Google right now? Is it a risky bet or a potential bargain?
That's something we can explore in more detail later. But for now, let's zoom out a little and look at the overall economic situation. Because honestly, the labor market is giving us some mixed signals.
Yeah.
Right now, initial jobless claims actually dropped last week.
Oh, wow. So is the economy actually stronger than we thought?
Well, maybe, but here's the thing. Continuing claims actually went up.
Yeah, to like a 3-year high.
Yeah.
It suggests there's some instability, especially in those sectors where demand is fluctuating.
So is the economy doing well, or is it about to crash?
Yeah.
I'm getting mixed messages.
What we're seeing is a labor market that's trying to find its footing. The drop in initial claims is a good sign, but the rise in continuing claims shows there are some underlying problems.
Okay, so how should the average investor interpret all this uncertainty?
I think it's a time for cautious optimism.
Cautious optimism.
Yeah, the economy isn't in free fall, but it's definitely not smooth sailing either.
Right.
This is where diversification becomes really important. Don't put all your eggs in one basket.
Speaking of diversification, let's talk about gold. That's usually considered a safe bet when things get rocky. And with the whole Russia-Ukraine conflict getting worse and Putin testing new missiles, gold prices are soaring, right?
Yeah, for sure. Geopolitical instability almost always drives demand for safe haven assets like gold.
Right.
Investors tend to look for stability when other investments are taking a hit, and gold is generally seen as a reliable store of value.
So is it a sure thing right now?
Not necessarily. I mean, even safe havens can fluctuate.
True.
The key takeaway here is that gold usually performs well when riskier assets like stocks are performing poorly.
So it's like a counterbalance.
Mm.
If the market takes a dive, gold might cushion the blow.
Exactly. But it's important to approach gold as just one part of a diversified portfolio.
Right.
Don't think of it as a guaranteed win.
Okay, fair enough. Now for something completely different, Bitcoin. It's on fire right now. It seems like that $100,000 milestone might actually happen. What's fueling this? Is it just hype, or is there something more fundamental going on?
There are a lot of factors at play, but the idea of a more crypto-friendly Trump administration is definitely adding fuel to the fire.
So people are betting that Trump coming back would be good for Bitcoin.
Yeah, I think investors are hoping that a less strict regulatory environment will be good for cryptocurrencies overall.
Right.
That could lead to wider adoption and potentially higher prices.
Makes sense. But
Yeah.
crypto is notoriously volatile.
Yeah,
Is this just another bubble about to burst?
that's a question every investor has to ask themselves. Cryptocurrencies are still relatively new, and their value is highly speculative.
Right. Okay, before we get too deep into Bitcoin's roller coaster ride, let's go back to Google. We talked about the DOJ's antitrust lawsuit, but what about their overall performance?
Yeah, their analysis actually revealed some really interesting stuff about their financial strength.
Really? Like what?
Well, despite all the legal drama, their financial performance is surprisingly strong. Their Q3 performance was really impressive. Total revenue grew by 15% year over year, and get this, their cloud revenue surged by 35%.
Wow, 35%. That's huge.
Right. And that's with all this legal pressure they're under.
So what's driving that? Is it this whole cloud boom everyone's talking about?
Cloud computing is definitely playing a big role, but Google's also doing a great job of using their AI expertise to set themselves apart in this crowded cloud market.
Right.
They're integrating AI into their cloud offerings, which makes them more powerful and efficient.
So it's not just about storage anymore. It's about adding value with AI?
Exactly. And it's working. Their cloud revenue hit over $11 billion in Q3, and their cloud profit margins have increased sixfold.
Wow, sixfold. That's incredible.
Yeah.
But Google is more than just the cloud, right? What about some of their other projects?
Well, they've also been quietly building up their subscription services,
Oh, right.
which actually offers them a more stable and predictable revenue stream compared to the wild world of advertising.
You're talking about stuff like YouTube Music, YouTube Premium.
Exactly. And it's proving to be a really smart move. Their subscription revenue reached $10.65 billion last quarter, up 28% from the year before.
So they're not putting all their eggs in one basket anymore.
Yeah, exactly. They're diversifying their revenue, which makes them less vulnerable to economic downturns and gives them multiple ways to grow.
It's like they're taking their own advice. Don't put all your eggs in one basket. But they're also pushing boundaries with innovation, right?
Absolutely. They're investing heavily in cutting-edge technology, things like AI and machine learning. They're pouring resources into R&D to stay ahead of the game.
So they're playing offense, not just defense against the DOJ. It's interesting how they can juggle all this. Legal battles, new revenue streams, cutting-edge technology, and still deliver such strong financial results.
It's a testament to their management, their talent, and their ability to adapt.
Now, we can't talk about Google without mentioning Waymo, their self-driving car project. Are those cars ever actually going to be, a normal thing, or are they just a cool idea?
I mean, Waymo's already operating in several U.S. cities. They're offering robotaxi services to the public. So it's more than just an idea. It's becoming a reality.
Wow, really?
Yeah, and they're still in the investment phase, but they've made a ton of progress with the technology, and they're getting the costs down.
So self-driving cars are on the road, but they're not ready to take over the world just yet.
Exactly. It's still early days,
Hmm.
but Waymo has the potential to disrupt the entire transportation industry.
Right.
And not just in terms of personal transportation. Think about logistics, delivery services, even public transit.
Wow, that's mind-blowing to think about how that could change everything.
It is, right. And that's just one example of how Google is betting on the future. They're also exploring innovations in health tech through Verily and Calico, pushing the boundaries in medical technology and longevity research.
It's like they're building their own empire of innovation. But how's the market valuing all of this? Is their stock keeping up?
Well, despite the DOJ lawsuit, their valuation still looks pretty good. Their current price is a reasonable entry point for investors, and their fundamentals are solid, with strong long-term growth potential.
So the market's not freaking out about the legal stuff.
It seems like investors are looking past the short-term noise and focusing on Google's long-term potential.
Interesting.
I mean, their analysis suggests their stock could reach $190 per share.
Wow.
That's a pretty big jump from where it is now. Of course, no one can predict the future, but their reasoning is based on Google's strong financial performance, their growth in areas like cloud computing and subscriptions, and their strategic investments in AI.
It's inspiring to see a company that's not afraid to take risks. But it's important to remember that every company faces challenges.
Definitely. No one is immune to market ups and downs, competition, unexpected events.
True. So what's the bottom line for our listeners when it comes to Google? Buy, sell, or hold?
Don't let the headlines distract you from the fundamentals. Google is financially sound with a proven track record of innovation and a bright future.
It's all about seeing the bigger picture and not getting caught up in the day-to-day drama.
Exactly. Always remember to do your own research and make investment decisions that align with your own goals and risk tolerance.
Okay, let's zoom out a bit and look at the overall market landscape. We've talked about NVIDIA, Dell, Google even touched on crypto. What's the general feeling out there? Time to be optimistic or pessimistic?
The market is definitely in a state of flux. There's a mix of optimism and uncertainty.
Right.
Tech stocks are doing well, but there are concerns about things like inflation, rising interest rates, and geopolitical tensions.
So it's a bit of a roller coaster ride.
You could say that there are opportunities out there, but it's important to be careful and manage risk.
So diversification and a long-term perspective are more important than ever.
Absolutely. Don't panic and make rash decisions based on short-term fluctuations.
Right.
Stay focused on your investment goals and ride out the waves.
I like that. Keep calm and carry on investing.
Exactly.
Now, before we move on, I want to go back to something you said earlier about these tech giants influencing the market. What about the other way around? How is the market influencing these companies?
That's a great question. The market is constantly changing. It's like a living organism. And even the biggest tech giants have to adapt. They have to innovate, diversify, and constantly prove their value to investors.
So it's a two-way street.
Exactly. The relationship between tech giants and the market is symbiotic. They influence each other, and their success is intertwined.
Fascinating. It's like a dance.
It is.
Now let's talk about something that's been on everyone's mind. Inflation. It's been a real problem for the economy, and it doesn't seem to be going away anytime soon.
You're right. Inflation is a complex issue that impacts everything from how much we spend to how we invest. We've seen the Fed raise interest rates to try to cool down the economy, but it's a balancing act.
So what does this mean for our listeners who are trying to make sense of it all? What should they be doing to protect their investments?
Well, it means we're in a period of transition, and it's important to be prepared for some volatility.
Right.
Inflation is eating away at our purchasing power, interest rates are going up, and there's a lot of uncertainty about where the economy's headed.
So should we just play it safe and move everything to cash?
Not necessarily. It's a time for prudence. Don't panic, stick to your plan, diversify your portfolio, and focus on the long term.
Okay, so stay calm and ride out the storm.
Exactly. The market rewards those who are patient, disciplined, and informed.
And speaking of being informed, this whole conversation is a good reminder of how important it is to stay up to date on market trends and economic news.
Absolutely. The more informed we are, the better decisions we can make.
Right. Knowledge is power. Now, before we wrap up this part of our deep dive, let's talk about the U.S. dollar. It's been all over the place lately, and these ups and downs can have a big impact on investments. What's driving those swings?
Well, the dollar's value is influenced by a lot of things. Interest rate differentials, economic growth, and global risk appetite.
Okay.
When the U.S. economy is strong and interest rates are rising, the dollar usually goes up. But when the economy is weak or there's a lot of uncertainty globally, the dollar tends to weaken.
So the dollar is like a barometer for how the world sees the U.S. economy.
Yeah, you could say that. It's the world's reserve currency, so its value is influenced by a lot of different global factors.
It's amazing how everything's connected. Tech giants, global events, economic indicators, currency swings. It's like a big puzzle.
It is, and as investors, we need to try to understand how all the pieces fit together.
We've talked a lot about risk today. Market volatility, geopolitical stuff, inflation. How should our listeners be thinking about risk in this kind of environment? Something to be afraid of, or is it an opportunity?
Risk is just part of investing. It's something we all need to understand and manage. There's no such thing as a risk-free investment. The amount of risk you're willing to take depends on your goals, your time frame, and your tolerance for risk.
So it's not about avoiding risk completely. It's about understanding it and managing it.
Exactly. And there are ways to manage risk. Diversification, asset allocation, hedging strategies.
So it's like building a financial fortress with layers of protection.
That's a great way to put it. And remember, risk and reward are often linked. Higher risk investments can have bigger payoffs, but there's also a greater chance of losing money.
So it's about finding the right balance between risk and reward that fits your investment style.
Exactly. And that's where a financial advisor can be really helpful. They can help you figure out your risk tolerance, create a plan, and navigate the market.
Well, this deep dive has been a great reminder that knowledge is power when it comes to investing.
Absolutely. The more you know, the better decisions you can make.
And that's what we're all about here, helping you stay informed, stay curious, and stay ahead of the curve.
For sure.
All right, let's take a breath and get ready for the final part of our exploration.
Sounds good. Let's see what other insights we can find. You know, it's amazing how everything's connected in the market, like tech giants, global events, economic indicators, all these things we've been talking about.
Oh, yeah, absolutely. And it's crazy how something happening over here can have a huge impact over there.
Totally. And you know, speaking of connections, I want to go back to those specialized funds we touched on earlier. I'm still a little fuzzy on how they actually work.
Yeah, me too. Are you talking about the ones with all those fancy acronyms?
Exactly. Those are CTA funds, commodity trading advisors, and they can seriously move the market, especially when things get volatile.
Right, right. The podcast episode mentioned they were optimistic about the S&P 500, which could bring billions into the market. But then they also said a downturn could trigger a $41 billion outflow. How does that even work?
Well, CTA funds basically follow trends. When the market's going up, they buy, which pushes prices even higher. But if things start going down, they sell, and that can make the losses even worse.
So they're like momentum traders, just riding the wave in whichever direction it goes.
Yeah, that's a good way to put it. And their actions can create a ripple effect across the entire market, especially when they're moving huge amounts of money. So understanding how they operate can help you anticipate potential shifts.
Okay, that makes a lot more sense. So let's get back to Google. We talked about that DOJ antitrust lawsuit, but their analysis also had some really interesting stuff about how financially strong they are.
Oh, yeah, for sure. Their report highlighted how Google isn't just surviving these legal challenges, they're actually thriving. Their Q3 performance was really impressive. Total revenue up 15% year over year.
That's amazing.
I know, right? And their cloud revenue jumped a whopping 35%.
Wow, 35%. Seriously, with everything going on.
I know. It's pretty remarkable. So what do you think is driving all this growth? Is it the whole cloud computing thing that everyone keeps talking about?
Yeah, maybe. But I'm guessing Google's also using their AI expertise to stand out in that market. It's getting pretty crowded out there.
You're absolutely right. Cloud computing is definitely a huge factor, but Google's strategically leveraging their AI capabilities to differentiate themselves.
Makes sense. So it's not just about providing storage space anymore. It's about offering solutions that use AI to add value.
Exactly. And this strategy is clearly working. Their cloud revenue hit over $11 billion in Q3, and their cloud profit margins have increased like 6 times.
6 times. That's insane.
It is pretty impressive. But we got to remember, Google's not just a cloud company. What about all their other ventures?
Right, right. There's so many things going on. What about their subscription services?
Yeah, those have been growing steadily too.
Yeah.
And that's good news for them because subscriptions offer a much more stable and predictable income compared to advertising.
Right, because advertising can be so unpredictable.
Exactly. And it looks like diversifying into subscriptions was a smart move. Their subscription revenue reached $10.65 billion last quarter, which is a 28% jump from the previous year.
So they're spreading their bets, not just relying on one or two things.
Yeah. Exactly. It's making them less vulnerable to economic shocks and allows them to take advantage of multiple growth opportunities.
So they really are practicing what they preach. Don't put all your eggs in one basket. But they're not just diversifying their income, right? They're still innovating like crazy.
Oh, absolutely. They're still pouring tons of money into cutting-edge technologies like AI and machine learning.
Right.
They're investing heavily in R&D to maintain their leading position.
It's like they're playing offense and defense at the same time. Fighting legal battles,
Right.
diversifying income, investing in the future, and still managing to deliver strong financial results. It's pretty credible.
It really speaks to their management team, their talent, and their ability to adapt and innovate in a rapidly changing environment.
Absolutely. Now, speaking of innovation, we can't forget about Waymo, their self-driving car project. Are those cars ever going to be, a normal thing, or are they just a cool idea?
Well, Waymo's already operating commercially in a few U.S. cities, offering robotaxi services.
Really?
Yeah, so it's definitely more than just an idea, it's happening. They're still investing heavily in the technology, but they've made a lot of progress and the costs are coming down.
So self-driving cars are on the road, but they're not ready to take over the world just yet.
Exactly. It's still early, but Waymo has the potential to completely disrupt the transportation industry.
Yeah, for sure. Not just personal transportation either.
Yeah.
Imagine what it could do for things like logistics, delivery services, even public transit.
Exactly. It's mind-blowing to think about how this technology could reshape our cities and our lives.
Totally. And that's just one example of how Google's betting on the future. They're also doing really interesting stuff in health tech with Verily and Calico,
Right.
pushing the boundaries in medical technology and longevity research. It's incredible.
It is. It's like they're building their own innovation empire. But with all this going on, what about their valuation? Is the market reflecting all this potential?
That's a good question.
Well, even with the DOJ lawsuit hanging over their heads, Google's valuation still looks pretty attractive.
Interesting.
Their current price is actually a decent entry point for investors, and their fundamentals are strong with really good long-term growth potential.
So the market isn't too worried about those legal challenges. They still see Google as a good long-term investment.
It seems that way. Investors are looking past the short-term stuff and focusing on Google's long-term potential. Their analysis suggests their stock could hit $190 a share.
Wow, that's a big jump.
It is. Of course, no one can predict the future with certainty, but their reasoning makes sense. It's based on Google's strong financials, their growth in cloud computing and subscriptions, and their strategic investments in AI.
It's pretty inspiring to see a company that's not afraid to take risks and really embrace the future.
Yeah, for sure. But it's important to remember that even the most successful companies will face challenges.
True. No one's immune to market ups and downs, competition, or unexpected events.
Exactly. So for our listeners out there thinking about Google, what's the takeaway? Buy, sell, or hold?
Yeah. What's the verdict?
I'd say don't let the headlines scare you. Look beyond the short-term noise and focus on the fundamentals. Google is a solid company with a bright future ahead of it.
So it's about keeping your eye on the bigger picture.
Exactly. Don't get caught up in the day-to-day drama. Always do your own research and make investment decisions that align with your own goals and risk tolerance.
Okay, that makes sense. Now, let's zoom out a bit and take a look at the overall market. We've talked about NVIDIA, Dell, Google, even dipped our toes into the crypto world. What's the general feeling out there? Is it time to be bullish or bearish?
Honestly, the market is a bit of a mixed bag right now. There's some optimism, but there's also a lot of uncertainty.
Yeah, I could see that.
Tech stocks seem to be holding up pretty well, but there are definitely concerns about things like inflation, rising interest rates, and all the geopolitical tensions going on.
Right, it's a lot to process. So it sounds like we're in for a bit of a roller coaster ride.
You could say that there are opportunities out there, but it's super important to be selective and manage your risk carefully.
So the old advice still holds true diversification and a long-term perspective.
Absolutely. Don't let your emotions take over. Don't make any rash decisions based on those short-term market swings.
Easier said than done
I
sometimes.
know. But try to stay focused on your investment goals and just ride out those waves.
Love it. Keep calm and carry on investing.
That's the spirit.
So we talked earlier about how these tech giants are influencing the market. What about the other way around? How is the market influencing them?
That's such a good question. The market is constantly changing. It's like this living, breathing thing. And even these huge tech companies have to adapt. They need to innovate, diversify their businesses, and constantly prove their worth to investors.
So it's a two-way street.
Exactly. The relationship between tech giants and the market is totally symbiotic. They influence each other, and their success is intertwined.
It's like they're dancing.
It really is. And as investors, we need to understand the steps, anticipate the next move.
Okay, so let's talk about something that's been on everyone's mind lately, inflation. It's been a real pain for the economy and doesn't seem to be going away anytime soon.
Yeah, you're right. Inflation is a really complex issue. It affects everything from consumer spending to investment decisions. And we've seen the Fed raising interest rates to try to cool things down and tame inflation, but it's a delicate balancing act.
So what does all this mean for our listeners? What should they be doing to protect their investments in this kind of environment?
Well, I think it means we're in a period of transition, and it's really important to be prepared for some volatility.
Right.
Inflation is eating away at our purchasing power, interest rates are going up, and there's a lot of uncertainty about where the economy is headed.
So is it time to batten down the hatches and just move everything to cash?
Not necessarily. It's more about being prudent than panicking.
Okay, so don't make any rash decisions.
Exactly. Stick to your investment plan, make sure your portfolio is diversified, and keep your eyes on the long term.
Got it. So stay calm and ride out the storm.
Exactly. The market rewards those who are patient, disciplined, and informed.
And speaking of being informed, this deep dive has been a great reminder of how important it is to stay up to date on everything that's happening in the market.
Couldn't agree more. The more informed we are, the better equipped we are to make good decisions and reach our financial goals.
So true. Now, before we move on to our final thoughts, let's touch on something that's been making headlines. The U.S. dollar has been bouncing around quite a bit lately, and those fluctuations can really affect investments. What's behind all that movement?
Well, several things influence the dollar's value, like differences in interest rates, how well the economy is expected to grow, and the overall appetite for risk globally.
Makes sense.
When the U.S. economy is doing well and interest rates are rising, the dollar usually gets stronger. But when the economy is weak or there's a lot of uncertainty in global markets, the dollar tends to weaken.
So the dollar is like a reflection of how the world views the U.S. economy.
You could say that. It's the world's reserve currency, so its value is influenced by a whole bunch of global factors.
It's amazing how interconnected everything is. We've got tech giants, global events, economic indicators, even currency fluctuations, all influencing each other.
It's a complex web for sure, and as investors, we need to try to understand those connections so we can make informed decisions.
Absolutely. We've talked a lot about risk throughout this episode: market volatility, geopolitical tensions, inflation. How should our listeners be thinking about risk in this current environment? Is this something to fear or is it an opportunity?
Well, risk is an inherent part of investing. It's something every investor needs to understand and learn how to manage. There's really no such thing as a risk-free investment. The level of risk you're willing to take depends on your goals, how long you plan to invest, and your personal tolerance for risk.
So it's not about avoiding risk altogether. It's about understanding it and managing it effectively.
Exactly. And there are different ways to manage risk. Things like diversification, asset allocation, hedging strategies.
So it's like building a financial fortress with multiple layers of protection, just in case one part of your portfolio takes a hit.
That's a great way to put it. And remember, risk and reward often go hand in hand. Higher risk investments have the potential for bigger returns, but they also come with a greater chance of losing money.
So it's all about finding that sweet spot, the right balance between risk and reward
Yeah.
that aligns with your own personal investment philosophy.
Exactly. And that's where having a good financial advisor can be so valuable. They can help you figure out your risk tolerance, create a personalized investment plan, and navigate all the complexities of the market.
Well, this deep dive has been a great reminder that knowledge is power when it comes to investing.
For sure. The more informed we are, the better equipped we are to make sound decisions and achieve our financial goals.
And that's what we're all about here at the Deep Dive. We're here to help you stay informed, stay curious, and stay ahead of the curve.
Absolutely.
All right, let's take a deep breath and get ready for the final part of our exploration, where we'll tie everything together and see what other insights we can uncover.
Sounds good. I'm ready.
Okay, so we're in the home stretch of our deep dive into all things market-related. Let's try to bring it all together. NVIDIA's dominance in AI, Google's impressive performance, those CTA funds trying to predict the future, the ups and downs of the economy, and of course, how it all affects you and your investments.
It's been quite a ride, hasn't it? We've seen how events that seem totally unrelated can actually have a ripple effect across the entire market, from those big tech giants all the way down to our own portfolios.
Yeah, it really highlights how important it is to stay informed about what's going on. Understanding these forces at play, both the big and the small, can help us all navigate the market better and make smarter decisions about our investments.
Exactly. And even when things are volatile, there are still opportunities out there. It's about having the right perspective, the right tools, and the right information so you can seize those opportunities.
Speaking of opportunities, let's circle back to Google for a second. Their analysis shows some pretty impressive performance, despite all those antitrust challenges they're facing. They're growing, diversifying, and investing heavily in the future.
And their valuation is still looking good. The market seems to recognize their strength and their potential for long-term growth, even with those legal battles still going on.
So for someone listening who might be thinking about adding Google to their portfolio, what's the key takeaway?
Don't let the headlines scare you. Look past all that short-term noise and focus on the fundamentals. Google is a solid company with a bright future.
Okay, that makes sense. Before we wrap up, let's touch on some of those broader themes we talked about today. Things like diversification, the impact of the overall economic environment, and why it's so crucial to stay informed. What are some final words of wisdom for our listeners as they navigate the world of investing?
Well, first and foremost, remember that investing is a marathon, not a sprint. Don't get caught up in all the hype or make rash decisions based on short-term market swings.
So it's all about having a long-term view and sticking to your plan.
Exactly. Develop a solid investment plan that aligns with your goals and your risk tolerance, and then just stick with it. Don't panic and sell everything when the market dips, and don't go all in on the next hot stock tip you hear.
So discipline is key.
Absolutely. Stay disciplined, stay informed, and remember that when it comes to investing, time is on your side.
And never stop learning, right? The market's always changing, so it's important to stay curious, do your research, and seek out different perspectives.
Well said. And, you don't have to go it alone. There are tons of resources out there to help you. Financial advisors, books, podcasts, online communities. They can all provide support on your investing journey.
It's like we're all in this together, trying to navigate the market's ups and downs.
Exactly. By sharing what we know and the insights we've gained, we can all become more informed and confident investors.
Well, it looks like we've reached the end of our deep dive today. We've covered a lot of ground, from the strategies of those tech giants to global events that are impacting markets all over the world.
Hopefully, you've gained some valuable insights and a better understanding of how the market works and all the opportunities that are out there for those who are ready.
So remember, the world of investing is constantly changing. So stay informed, stay curious, and most importantly, never stop learning.
That's right. And don't forget to have some fun along the way. Investing can be an exciting journey. So embrace the challenge, enjoy the ride.
That's a great note to end on. Thanks for joining us for this deep dive into the markets. We'll see you next time for another exploration into the fascinating world of finance and investing.